Greetings to you all. It's your boy Chat Master here in Johannesburg, South Africa. I welcome you all to Chat Master FX. Today we are going to look at momentum shift, MS. This is one of the easiest strategies, guys, that you can get at Chat Master FX. So I know that some of the standard operating procedures that we use at Chartmaster FX, they are complex and they may take some time for you to understand. So today I brought you a price approaching strategy that you can be able to use. Once you master it, you can go to the charts and do your back testing and do your forward testing. Then you can start to trade it on the live account. So let's go straight to the content of today. So this is the anatomy of the momentum shift. As you can see, guys, that when we are talking about the general theoretical perception of momentum shift, as the name implies, there is a shift of momentum to some sorts. So a momentum shift occurs where the price drops. If it is a sell setup, a price drops down with strong momentum, which means this price will be at full speed as it is dropping down. Once the price makes a heavy drop, then the price starts to slow down, going back to where it is coming from. Generally, that's what we call momentum shift. We are saying, in simple words, that the momentum has shifted from being strong momentum to being weak momentum. And there are some synonyms for weak momentum. We have what we call accumulation, we have what we call compression, but all these three things, they are different, but for the sake of simplicity in this course, we are going to treat them as the same. So you need to look for weak momentum as the price is approaching a certain valid decision point. So guys, this is the anatomy of the momentum shift. So the first thing that you need to identify on the momentum shift is a valid decision point. Those who have not watched the MPL video and the DM video, you need to go and check for those journal articles. They are going to help you to classify which decision points are valid and which of the decision points are not valid. So as you can see, guys, that we have an MPL here. We have an MPL of type 3. And what happened is that the price, as it was coming from this MPL, it went with the strong momentum to the downside. So the price was at full speed as it was going down. So here, guys, it might be an MPL, it might be a Quasimodo level, or it might be a double maru, or it might be an ignored level. But for the sake of this course, we are not going to talk about ignored levels. We are only talking about the MPL, the DM, and the QM level. So those are the decision points that you need to look for. And once you see a valid decision point, then you wait for the price to drop to a certain level. Then you wait for the price to approach this MPL or this decision point in a form of weak momentum. So generally, when it comes to momentum shift, we have three types of momentum shift. We have what we call the 90-degree shift, and what we call the 45-degree shift, and we have what we call the acute shift. So in order for you to determine that this one is a 90-degree or a 45 or an acute shift, you look here, guys. This is where you look for the type. If you check here, if you can draw a line here and it touches this one, you can be able to determine the type of momentum. And in this case, it might be a 45 or a 90 degree, probably a 45 degree here, shifting momentum. So you need to know all those types of momentums. Some of them, they consider momentum here, but at Chartmaster FX, we consider on the upside here. That's where you can determine the momentum type. So once you see the price approaching the MPL, then that's where you draw your price action zones here, guys. Price action zones, they help you in trade management. They help you to monitor your trade. As you place your trade here, as the price is going down, you need price action zones here to help you to see the reaction of the price. Sometimes the price may not reach here if you are not careful, but if you understand the technique of price action zones. Unfortunately, we are not going to deal with price action zones in a deeper spectrum. We are only going to look at the general price action zones. I actually uploaded a video on the price action zones. You need to look for that. But to simplify things, we are not going to go deeper, but I'm just going to give you a highlight of the importance of price action zones as far as managing your trade is concerned. So guys, yeah, basically this is the anatomy. As I have said before, we must be having a MPL here, or a valid decision point that the price drops with strong momentum to the downside, and as the price is approaching this decision point, then you can be able to place your trade here, and you put your stop loss just above the MPL area. Then you put your target profit at the beginning of the momentum shift, which is the weak momentum. So guys, the other thing that you need to consider now, so I have said that in order for you to determine this is a 90 degree or a 45 degree or any acute, you need to consider on the upside here, not in the downside. But in the downside as well, you need also to calculate something here. This one must be a 45 degree, mostly nearer to the 45 degree. Then you can consider it as a momentum shift. So guys, we want to simplify things here. We don't want to go deeper when we are talking of momentum shift. We don't want to go deeper. We just want to do the general anatomy of the momentum shift, and you don't need to know much things in order for you to be profitable. This information that I'm releasing to you, you can be able to trade with it profitably. I don't want to complicate things here. So let's go to the terms and conditions for a sale setup. So when we are considering a sale setup, as I have said before, that these anatomies, they work both for sell and buy setups. So you will see when I present my examples, I'm going to look for a buy and also a sell setup, so that you guys, you can be familiar with all the setups. So there should be an MPL or any valid decision point in order for you to be able to consider it as a valid momentum shift. So once you have an MPL or a valid decision point, then on that zone, that's where the price drops down if it is a sell set up. And when the price drops down with the heavy momentum, then you wait for the price to come back to the MPL or a valid decision point. Then you can be able to place your trades there. So the price should descend with strong momentum. As I have said, the price should ascend to the MPL with weak momentum. Enter at the MPL zone. Stop loss, the stop loss should be above the MPL. Target profit, the target profit should be at the beginning of the weak momentum. So guys, these are the conditions for a sale setup. So now let's go straight to chart examples. So as you can see, guys, here we are on boom 1000 index on H1. So the first thing that you need to do is to identify an MPL. We have four types of MPL: MPL1, MPL2, MPL3, MPL4. Check the journal article on maximum pain level. You'll be able to see those types of MPLs that I am talking about. So here we had a valid MPL here, and what happened is that the price dropped down with strong momentum. As the price dropped down with strong momentum, we can see that the price created a lower low here. So if I can draw a line here, I can draw a diagonal line here connecting all these points, and also draw a straight line here. You can see that we have almost a 45-degree momentum shift, which is one of the conditions that you have to look at the bottom here. Then you can draw another line as well on the top here and see which type of momentum it is. It is a 45-degree. This one to the bottom, it just helps you to validate whether it is a momentum shift or not. If you find that it's almost nearer to a 45-degree, then you can consider that as a valid momentum. But here on the top, you draw another line as well and see what type of momentum is it, which is almost a 45-degree as well. So yeah, I don't want to complicate things here. We just want to take things as simple. So what happened is that the price went with weak momentum, guys. As you can see, if I can draw a line here, guys, you can see that this was heavy momentum, guys. It was heavy momentum. It's almost a vertical line going down. And here, guys, this was a diagonal line. You can see that the price was now slowing down, going towards a valid MPL or a valid decision point. So here, guys, you can see also that when weak momentum occurs, usually there's a 3 drive. There is a 3 drive that occurs as well. And also sometimes there is a compression that occurs as well. And also it might be compression with liquidity. If you need to understand about those things, guys, you can join our Telegram community group where we discuss these things, and people will be sending their different flashcards and helping each other to make it in the forex market. So if you want to understand about other standard operating procedures such as compression and the 3 drive, you can join our community channel. But I will also upload some of these videos on the 3 drive and the compression, so that you can also benefit from the standard operating procedures that we are offering at Chartmaster FX. So yeah, guys, so you can see here that this is weak momentum, guys. There's strong momentum to the downside and there is weak momentum to the upside. So guys, as you can see, guys, if I can draw a line here, those who know what a 3 drive is, if I can draw a line here, guys, you can see that this is a 3 drive. It's a 3 drive. And the 3 drive also, it's a concept that has got a lot of things. But generally, when we are talking about 3 drives, guys, we can see that generally you can see we have 1, 2, 3. When we are saying a 3 drive, we are saying that the market actually made a first drive, it made a second drive, and it made a third drive, guys. You see, so this one we call it 3 drive without uniformity. 3 drive without uniformity, guys. So yeah, the price approached the MPO in a 3 drive, and also there is weak momentum, and this is kind of a compression. Why am I saying so? You can see, guys, that the price was compressing to the MPO, and this demand was taken out by this one 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 was not taken out. So we have a fresh zone here. If you know your price action zones well, just a basic hint, guys, this one is fresh. So once you place a sale here, you mark your zones, your price action zones, and you know that if a demand is fresh, then when the price comes to that fresh decision, the market is more likely to react. But here you can see all these demands have been cleared here, all these orders have been cleared here. This order has not been cleared, and this one has been cleared by this one is cleared by this one has not been cleared. So we are expecting a price to react here, and the price reacted, and this one has not been cleared, and we see that when the price came to this, it actually reacted for a short while and went up, and when it comes here to a fresh decision point, price action zone, the price reacted for a short time, and it was stopped by this guy, and it went down to a fresh price action zone, and when it went to a fresh price action zone, the price went up, and it was stopped by this guy, and it went down. So guys, this is the importance of price action. So to just help you in your trade management, so that you may identify some of the target profits if you want to take some partial profits here. So generally guys, this is what we call this is what we call a momentum shift. So the momentum shift, you can also look at some of the conforming things which makes it a confluencing setup. So you can look for the 3 drive, you can look also for compression. So this is example number 1. Let's go to example number 2. On example number 2 here guys, we can see that we have an MPL here of type 1 here. There's an MPL of type 1 here. So you draw your MPL zone. Once you draw a MPL zone, you can see that the price came heavy to the downside, and once the price came to the downside with a heavy momentum, you can see guys that if we can draw a line here from the area of the lower low, here's our lower low, it's almost a 45-degree momentum shift to the downside. So once you see that condition, then you know that this is really a momentum shift. But you check on the top here, you can draw a line, you can connect here, and you can see guys, if I can draw a line here, it's almost a horizontal line, and you can see the price dropped, and we have a horizontal line here. So we have a 90-degree momentum shift. Those things guys, they have an implication, but for the sake of this course, I just want to simplify things guys. I don't want to complicate things. So as you can see that when the price was coming to a valid MPL or a decision point, the price was able to stop here, and it went to the downside. So you have to give a room for breathing for your MPL. You have to give a room for breathing to avoid some stop hand losses like this one. It was a stop hand. So guys, as you can see that the price actually made a compression here. This was taken out by this one was taken out by this one was taken out by this one was fresh, this one was still fresh, this one was still fresh, and you can see that the price made a compression to the upside. Once the price made a compression to the upside, so when you place your trade here, you draw your price action zones here, so that you can monitor your trade as it is coming down to take some partial profits if you want to take some partial profits. But the safest take profit guys is here guys, the depth of the first strong momentum. Where we have this strong momentum here guys, mostly this target profit will be hit. So yeah, price action zones, if you are not familiar with it, then you can just wait for the price to come to the decision or to the lower low here, then you can take your safest take profit here. So you can see guys that what happened here guys, this one was fresh guys, this was a demand that was fresh, and we expected the price to bounce back here. So what happened is that the price was able to come back smoothly, and it was held by almost this one, it went up, and I tried to go down, this one also was able to hold the price, and it went up, and finally finally the price was able to drop, because here guys, all these demands have been cleared. So once these demands have been cleared, we are waiting for the price to make a reaction to this demand here. So what happened when the price reached to this demand? The price was able to ignore this level, but once it ignored it, you can see that when the price came back to that one, it acted as a flip. But you can see guys, this demand guys was still fresh also. So the price came to this decision point, and you can see that this fresh demand was able to hold the price for some while. So we already know that once this take profit has been hit, and we had all this demand, all these orders has been consumed, so the price was free to come to this decision point. So guys, this is the importance of price action zones. You know what is happening in the market in every minute, in every second. You will be knowing what is really happening. So this is example number 2 guys. Let's go to example number 3. So in example number 3 guys, we have an MPL here of type 1. So once we have an MPL of type 1, the price dropped with heavy momentum, and the price created a lower low here. And if you can draw guys the line connecting this, you can see this is almost a 45 degree, but a less than 45 degree, but it's still fine. And if you can draw guys a line from the top here, you can see it's almost a 45 degree kind of. So what happened to the price when the price was approaching this MPL? You can see the movement of the price to this MPL guys. And you can see there's a 3 drive here. There's a 3 drive here, which is a 3 drive without uniformity to the MPL. Then you can be able to place your trade here, and you can see guys, we have a good key level here. Those who have done the claw key level over under, you will see that this is almost a claw. This is almost a claw setup guys. These setups actually confluence each other. So this low was actually broken. You can draw in over under here, and also you have a decision point here of if you check the DM, you see this kind of a setup guys, and this was able to hold the price. So this was a claw kind of a setup confluencing with the momentum shift. Guys, so yeah, so it is what it is guys. So when the price was coming to the MPL area here, you can see that this demand was cleared by this one was cleared by this one was cleared by this one. So here we were expecting that the price would react to some sort here. We would expect the price to react, because this demand is still fresh. It's still fresh guys, and we have a fresh decision point, a fresh price action zone, a fresh pass here. So once the price came here and it actually reacted to this pass, and it went up just for a short time, going to this Quasimodo level kind of. It was not a Quasimodo level because it had not yet broken it. Okay, it's fine. But the price reacted here and it dropped. So once the price is dropping, once you have drawn your price action zones now, and you've placed a trade here, now you are monitoring your trade, you would know that the price will react to some sort here. Once you see it breaking this price action zone, then you are happy that the price is going to go to the next clean demand. It came to this clean demand. You can see it actually reacted for a short time, but it failed to make a heavy reaction and actually dropped. Once it breaks here, we know that the price is going to this decision point. And what happened to this decision point? We can see that it actually engulfed this one. This one was not able to hold the price. And you can see guys that a flag limit was created here. Once a flag limit was created here, you can see that when the price came for the first time back to this flag limit, this flag limit was able to hold the price. And once you see that this flag limit has hold the price, then you know that we are expecting a heavier drop, and we don't have anything to hold the price to this historical past. Then you know guys that your trading is going to the downside. So yeah guys, this is example number 3. Let's go to example number 4. In example number 4 guys, this is a buying setup. I promised you that I was going to give you an example of a buy setup, As you can see, guys, here we have an MPL here. An MPL here, and here, guys, we have a demand. This is the depth of the demand. So, guys, if you want to be safe, you just put your stop loss below this demand, guys, because the price may come to this one, but it might no, it doesn't engulf. Once it engulfs, it means that the price has actually failed, the setup has failed. So, guys, this we can see that, guys, the price actually approached this decision point in the form of a 3 drive, and this one we call it a uniform 3 drive, guys, a uniform 3 drive, guys. And you can see also that this one was a compression. The price compressed to this MPL. So you can see that this one is confluencing. We have a 3 drive, we have a shift in momentum, you have also a compression, and this one is a uniform 3 drive, guys. This is a uniform 3 drive, guys, and you can see that when the price came to here, guys. So here, guys, as you can see, this one, there is nothing to stop the price. You can see, guys, this one was cleared by this one, this one was cleared by this one, this one was cleared by this one, this one was cleared by this one. So usually you can see these wicks, guys, clearing the way. It was clearing the way, and you can see, guys, as the price comes back to cover this zone, guys, you know that there's nothing to hold the price. It was just hold by this one just for a short time, and it went to hit our safest to take profit, guys. So don't even leave such kind of setups, guys. These setups, they are very, very good, and this was almost a 45-degree momentum shift. So, guys, let's go to our last example on step index M30, guys. You can see here, guys, we have an MPL here, we have an MPL zone. So what happened? The price dropped with a strong momentum and created a 45-degree kind of shifting momentum. It was a 45 also to the top side, and it went to the MPL area. And, guys, you can see that there was a compression. The price was compressing here. It was compressing, and it had a liquidation. We see a liquidity here that actually occurred to the MPL area. So you can see this demand was cleared by this one was cleared by this one cleared by this one cleared by this one was cleared by this one was cleared by this. So almost when the price reaches this area, guys, we know that there's nothing to hold the price, and we know that we are heading to our safest take profit. So once you draw a price action zone, so once the price reaches this area, guys, and you know that once it breaks this area, we are heading to the take profit. We are heading to the take profit. Nothing to hold the price. And you can see, guys, that this demand has been taken away by this one. So usually this demand is not strong enough to hold the price. So the price is more likely to look for another demand. Here, this demand was almost a fresh demand somewhere here. So this guy was able to hold the price. That's why you see that the price came to this guy. So, guys, as you can see, guys, that what happened here with the free flow of price, guys, the free flow of price to our take profit, guys. So yeah, this is kind of we have a momentum shift. We have also compression plus liquidity, which we call CPLQ. So sometimes these things confluence each other. Once you have that confluence, then it might help you to actually place higher probabilistic trading setups. As you can see, guys, that this one is also a Quasimodo level here. It's a Quasimodo level. So yeah, it actually brings confluency to your trade. So, guys, this is just a general idea of the momentum shift, guys, and I can promise you that once you can be able to trade these ones, you can be successful. You don't have to complicate things. I just wanted to simplify things here. So you have seen some confluences that happen as the price approaches an MPA or a valid decision point here. And guys, I have just given you a hint of price action zones, how they help you to see or to actually manage your trade and see some of your partial take profits, and look at the behavior of the price as it is approaching your target profit. But in this course, we are not going to go deeper in the price action zones. We just want to have a base of what price action zones are and how they can be able to help you to do your trade management. So guys, thank you for listening this tutorial. So guys, those who have not yet joined our Telegram community channel, you need to join our Telegram community channel so that you can be able to learn more about our trading style at Chart Master FX. If you like this video, please subscribe, like and share, and also hit the notification bell so that you don't miss any of the tutorials that we will be posting on this channel. So yeah, your boy Chatmaster here signing out.